The market crash has gone from bad to worse as trade war tensions heat up between the US and China, and they show no signs of cooling. But what if the tariffs and the resulting market crash are just the leverage being used to negotiate a new global currency deal? And what does this mean for hard assets like gold and Bitcoin? We looked to global macro expert Gromen and US Treasury Secretary Scott Bessent for clues as to where this is all headed, and how you can position yourself to survive and even thrive this monumental economic shift. Bitcoin dumping over the weekend was once again the canary in the coal mine for global markets, as the S&P 500 saw its worst week since the March 2020 COVID crash continue into this week. Bitcoin initially showed some resilience last week, briefly touching 88K before settling around 83K to end the week, but has since joined the broader market decline, going as low as $76,000 today. Much of the market sell-off and panic has come from increasing global tariffs from the Trump administration and heating trade war tensions, specifically with China, who seems steadfast in not bowing to the US and even saying today that they plan to fight to the end. And in response, the White House put into effect an increase in tariffs on China as they reach a whopping 104% today. Meanwhile, other countries like Israel, Japan, Italy, and even South Korea have come to the table and plan to negotiate a new trade deal with the US, leaving China to look more and more isolated in their descent. But what is the end goal of these tariffs and the resulting negotiations? Originally, the Trump administration had laid out one of the goals was that they wanted to see the 10-year US Treasury yield come down, but the opposite has started to happen, as the 10-year has now risen, signaling perhaps a large nation, potentially China, has begun dumping US Treasuries. And with China still having an estimated $700 billion in US Treasuries left to dump, things could start to get real dicey. The real signal of what the Trump administration is trying to do with these tariffs is in a recent memo straight from the White House, which says, quote, "On the financial side, the reserve function of the dollar has caused persistent currency distortions and contributed, along with other countries' unfair barriers to trade, to unsustainable trade deficits. These trade deficits have decimated our manufacturing sector and many working-class families and their communities to facilitate non-American trading with each other." The White House has basically laid out the Triffin dilemma, which simply put is a problem that arises when one country's currency, in this case the US dollar, is used as the global reserve currency. The dilemma is that the US must provide the world with dollars, but doing so weakens its own economy. And if it stops, the global system suffers. So, for the first time ever, a US administration is admitting the burden that being the global reserve currency bears. By reading that quote, one would be inclined to think the US is after a new currency deal, one where either the US dollar is no longer the backbone of the financial system, perhaps even going back to a hard money-backed standard, or they want to see the US dollar significantly devalued in order to ease the trade deficit burden. And what can be done by the US in order to avoid a full-on economic collapse? One possibility that could potentially be used as a last-ditch effort is to revalue the nation's gold reserves to current market value. Macro analyst Gromen was on Natalie Brunell's show recently, and he talked about this option and the tightrope the US is currently walking on in avoiding a full-blown crisis.
Do you think it's likely that he could revalue gold at least to current market levels?
I think it's very likely he could do it to at least current levels because they're running out of room. I think I've said 3 to 5 months to a very severe crisis. And I would take every day that passes, every day we have Trump come out and say, like yesterday morning, it wasn't even lunchtime, and I've got sanctions on Russian oil, and I've got maybe I'll sanction everybody, tariff everyone. That's just going to get everyone to sit on their hands more. I would take the under on that 3 to 5 months. So I do think he will do that eventually. Why wouldn't he do it? Look, if the plan is to basically fly the plane into the ground at 500 miles an hour in order to create a crisis so severe that they have wide berth to political cover, to sort of restructure the system as they see fit. If they think that's a good thing to do and they think politically they can survive that experience, then don't do anything. Just keep doing what you're doing because that's what we're going to do. And then once the plane smashes into the ground and people are begging for salvation, then you've got a lot more leeway. I just have a hard time believing that's the case. So that's pushback one is, they want this to crash. I'm like, you really understand what you're asking for? And because again, politically, like if they do that and then they bail out too big to fail banks, they're done politically. They're done. It is over. They will get crushed in the midterms. The other reason they haven't yet, some of it could just be as simple as it takes time. They're figuring this out. I think all else equal, this is the last thing they'd like to do. And so they wanted to maybe try some other things first, which are obviously not working now. It's not going to work. And then I think the last is some of it's political. Look, Trump's a New York guy. Bessent's in that world, Lutnick's in that world, they're going to have a lot of people in their ear saying basically make the American people scream, don't hurt the Treasury market's real value. And the reality is, unless they want the worst crisis they've ever seen, after which they're going to get bailed out and destroy themselves politically by doing so, that's what they have to do. It's the MAGA reshoring, all this stuff. It's a simple choice. Crush the real value of treasuries, or you will not be able to do all these things you say you want to do politically and economically.
So as Gromen says, the Trump admin can't politically afford to have too big to fail banks begin to fail. They need to see the 10-year Treasury come down soon, which in my opinion means they will need to start printing sooner rather than later in order to avoid a situation where they are bailing out banks in a full-on economic crisis. Gromen also gave his thoughts on when Bitcoin will truly start to decouple from the Nasdaq and tech stocks and begin to follow gold's lead in absorbing global capital flows.
So near term, you're pretty bearish on Bitcoin. It's been closely tracking with these tech stocks. So what do you think will finally make Bitcoin break away from that correlation with the Nasdaq? And I'm assuming you think negative real rates is going to help drive that.
I would think negative real rates will help tech and Bitcoin marginally, but I think it really is around this dynamic that I still don't get the sense that investors really appreciate, which is America is basically flat out telling not just China, but China's the biggest, take your money and go home. We don't want it here anymore. You want to build a factory here, great. But if you just want to come here to buy stocks and dump money here, we don't want to be your laundromat anymore. And that, I think, will ultimately be a catalyst to the separation of Bitcoin and Nasdaq. And that is, I think, starting to drive Nasdaq down. It has a long way to go because multiples are high. Now, if you back up 5-year, 10-year chart, you can see very clearly these periods where Bitcoin has massively outperformed Nasdaq, massively, but they still tend to go directionally similarly. Right now in the short run, that correlation is holding. At some point, I think capital flow is going to see Bitcoin for what it is, which is a neutral reserve asset linked to energy, uncontrollable by any government. And I think it'll start siphoning some flows off from Nasdaq as America continues to say, listen, you want to invest in factories here? Great. Otherwise, get out. And that's a lot of capital that's got to get out. And we're seeing the gold benefit already. I think what we're seeing in gold is a precursor to what we'll see in Bitcoin. Gold is going up despite real rates over the last couple of years. That's the kind of divergence I think we'll see as a result of these flows in what the Trump administration is attempting to achieve.
Yeah, I agree with you. It's a good time to stack.
So although Bitcoin hasn't become the perfectly uncorrelated flight to safety asset that Larry Fink, among others, knows that it is, each market cycle shifts it further from a speculative high-risk tech play towards a strategic holding like gold. And Bitcoin's performance compared to gold, the S&P 500, and the US bonds since October 2024 has me remaining optimistic this trend will continue. I think it's also important to compare Bitcoin's performance during this massive market downturn compared to the last big one in March of 2020. During the March 2020 market liquidation event, Bitcoin dropped from around $10,000 to as low as $3,000. And today, during a larger market crash as far as percentage goes, Bitcoin has held up remarkably well in comparison. In the 2020 COVID crash, analysts barely noticed Bitcoin. But today, they mentioned it in the same breath as gold and treasury bonds. That's a massive narrative shift. And speaking of narrative shifts, U.S. Treasury Secretary Scott Bessent was on the Tucker Carlson show on Friday, and he said something that I think many people are overlooking.
Why is gold moving around the world in such huge quantities right now?
A couple of things. Physically, it's moving because of potential tariffs here. So it was unclear whether we were going to exempt gold from tariffs, which I believe we have. So there was a big move out of vaults in Switzerland, out of vaults in London to get it into New York. And look, there are a lot of different stores of value over time. Bitcoin's becoming a store of value. Gold has historically been a store of value. I think what's interesting is where do we see the gold demand coming from? A huge amount is from China.
Yes.
Where, as I said, they're in the middle of an economic recession/depression. People don't trust the Chinese currency because they have capital controls. There are 1.4 billion Chinese who all want to get their money out and they won't let them. They will let them buy gold.
All in the same breath, Bessent says stores of value change over time, Bitcoin is a new store of value, gold is an old store of value, and then goes on to say that China, the US's main economic rival and trade war opponent, is currently hoarding gold. I think there is definitely some signal in there somewhere that points to the shift from gold to Bitcoin that we will continue to see over the next decade. And so as the US government and the financial world begin to view Bitcoin alongside long-standing assets like gold and bonds, you can add it to your retirement portfolio through Swan. Swan IRA makes this simple and secure. no hidden fees with unmatched support and easy onboarding. Swan IRA helps you build your legacy your way. Learn more at swan.com/IRA. And remember, you can make a 2024 IRA contribution until April 15th. And a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So the name of the game during this monumental shift in the global monetary system and the market crash that we are in the midst of is capital preservation. And the best way to preserve your capital in times like these is through hard, scarce assets like gold and Bitcoin. Gold being the old guard and Bitcoin being the revolutionary new guard. The end result of this trade war is that all countries are going to print, because all countries want to devalue their currency to make their exports more competitive. So regardless of who wins this game of chicken between the US and China, both are going to have to print, and Bitcoin stands to win the most in that scenario. But I'd love to hear what you think of all this. How do you see the trade war playing out over the next few months? Let me know your thoughts in the comments below. Like this video, share it with friends, subscribe to the channel, and hit the notification bell so you don't miss the next video. Thanks for watching, and remember, TikTok next block.